Good afternoon, ladies and gentlemen. Welcome to Bligh Street. As is customary, we begin by acknowledging the first Australians on whose traditional lands we meet. I'm Sam Roggeveen, Director of the International Security Program at the Lowy Institute. I'm delighted to be joined on stage by Ben Sameld, Joe Masters and Hervé Lemayeux, who I'll introduce more formally in a moment. Welcome to you all. Ladies and gentlemen, it's reasonable to say that many of the political and economic certainties that have defined the post-Cold War world now appear far less certain. I'm thinking of the 30-odd year period in which most of us in this room have spent our working lives, which have moulded us, shaped us, and which taught us to expect certain things, such as that the information revolution will bring down dictatorships, that as China grows richer, it will become freer, that civil wars will persist, but interstate wars will decline, that liberal democracy will spread throughout the world, that communism has been defeated, that there is an unstoppable trend toward globalised supply chains marked by ever freer trade between countries, and that the attractions of populism will decline as people become wealthier. All these ideas, and more besides, are now being feverishly debated and revised, and not just in rooms like this one. They're also being settled on the battlefields of Ukraine and Gaza, on factory shop floors, and in cabinet rooms around the world. And crucially for our conversation today, they are being discussed in boardrooms throughout Australia and the world because our fraught and unstable geopolitics and the end of the post-Cold War period of peace and growth has such profound implications for companies and for economies. This set of concerns has been grouped under the catch-all term geopolitical risk. Back in 2018, a US Federal Reserve paper defined geopolitical risk as the risk associated with wars, terrorist acts, and tensions between states that affect the normal and peaceful course of international relations. And one of the things I'd like to get into with our panel today is whether that definition is adequate. But however we define geopolitical risk, we can say with certainty that the concerns of think tanks like this one have begun to converge ever more with those of companies like those represented on our stage today. I note that Treasurer Jim Chalmers gave a speech last night in which he said economic and foreign policy had become almost indistinguishable. That is a quote. And on that note, I'd like to introduce our panel. In the middle, Joe Masters is partner and chief economist at Barrenjoey Capital Partners. Joe has been a highly regarded part of the economic debate in Australia for over 25 years. Her career started in banking and financial markets, with 14 years at Macquarie Bank and also stints at ANZ and EY. Ben Sameld, to my immediate left, is Chief Investment Officer at the Future Fund. He previously served as Deputy Chief Investment Officer and as Head of Alternatives with responsibility for the investment of over $30 billion of capital. He also spent 10 years in the hedge fund industry and 4 years at an industry super fund. And on my far left, Hervé Lemayeux is Director of Research at the Lowy Institute. His research interests include strategy and geopolitics, global governance, Australian foreign policy, Southeast Asia, and data analysis. He started his career at Oxford Analytica, informing government and business on geopolitical risk in Asia. Ladies and gentlemen, would you make them welcome? And with that out of the way, I'd like to begin inevitably with the T word, with Trump. And Joe, could you start us off? Because I know Barrenjoey, for Barrenjoey, you wrote a paper just in the last few days with some analysis of the implications of the result for the global economy, but particularly for Australia. Can you say a little about how Barrenjoey's feeling about the implications for Australia of the Trump victory, and particularly the prospect of tariffs and interest rate movements?
Yeah, sure. So start with a big question, but one that's very front of mind for investors and for corporates around the world, not just here in Australia. I think, it was surprising to get such a resounding win for Trump and what looks like a clean sweep. And so for economists now, the prospect that the full suite of Trump's policies, including some that are a bit more extreme, go through has obviously risen. And economists around the world are grappling with what does that mean for the economy. Now, there's still plenty of uncertainties. We still don't really know what Trump will enact versus how much brinkmanship there is. But there are some economic implications that are quite clear, and then there are some that are less certain and where we think, I guess, investors and companies perhaps are underappreciating the most likely scenario. So what is most likely? Higher inflation in the US, actually lower growth in the US before it gets a bit faster, lower potential growth in the US and a tighter labour market, weaker growth out of China, and that's spilling over to the global economy, and particularly the Asia-Pac region. So for Australia, actually the biggest concern for us is really nothing to do with inflation. It's actually to do with the growth hit to China and the roll-through of that as a terms of trade shock to Australia. What we think investors have underappreciated, though, is that higher inflation in the US doesn't necessarily mean higher inflation for everyone. And that's really how you've seen financial markets react. In the lead up to the election and post-election, we've seen bond yields rise everywhere in the world, which basically tells you markets expect higher inflation. But really, if you get this supply glut building in China, in Asia-Pac, perhaps even in the European manufacturing base, they export deflation. The prices of things like washing machines, fridges, cars actually goes down. So our latest analysis shows, for example, that we think that China actually has more deflation than it would have had without the tariffs because the growth impact is so large. And for Australia, we think about the same. So when we talk about interest rates, we see a world now, and we're in the midst of rejigging all of our forecasts, but we see a world now where the US Fed doesn't cut by as much as we thought, but we've actually penciled in more rate cuts from Europe, more rate cuts from Japan, from Asia-Pac generally, from the ECB. And for Australia, we think the RBA the domestic economy will open the door for a rate cut in February anyway. But I actually think the election increases the chance for a rate cut rather than takes that probability away because of this deflationary force that we see coming through those manufacturing bases.
So Ben, your response to all of that, but also to the broader question of what this election represents in terms of those kind of mega trends that I mentioned early on. In particular, is this the end of a certain phase of globalisation and a reversion to something we saw before the age of globalisation?
Yeah. So I don't know if it's the end of that phase, but it's certainly a continuation of trends that we've been tracking closely and predicting, I guess, and preparing our portfolio for some years. The parts of that, I agree with much of that. Certainly the impact on the Chinese economy, certainly the impact on US inflation vis-a-vis rest of world, certainly the relative growth impacts on US versus Australia. I think the immediate response of financial markets was relatively predictable. Rates went higher, US dollar went higher, equities went up. We had more or less prepared the portfolio for that outcome on the risk that, we thought was also the reasonably high probability that you would get a Republican victory and a slightly lower probability of a sweep, but still high. Now, the thing we're watching very closely is who is his cabinet, essentially, who takes up these very important positions through the cabinet. And the vector that we look at that through, more than one, but in particular, the thing that we're finding interesting at the moment is that many of the candidates that have been, for those positions that have been mooted, are pretty intensely, strongly, publicly isolationist. And the initial, all the chatter before the election, I think, is a lot of like how much of this is brinkmanship, how much of this is, Trump being Trump, trying to set up for a deal. most people we talk to would suggest far less so this time around. This is a far more organised, far more serious, a far more deliberate, policy machine. And his initial appointees certainly go directly to, he said tariffs, you betcha. He said less immigration, you betcha. He said much more isolationist, the rest of the world's going to have to fight for themselves. Initial, yeah, you betcha. So they all have some pretty interesting implications for the relative growth, relative rates, relative FX, all the things that we really care about, and absolutely for Australia. So we continue to see, as he drip feeds those announcements out, we sort of adjust our probabilities, but so far that seems to be, much more than last time, I would say. It seems to be what he had more or less mooted along the trail. He seems to be, enacting.
Before I go to Hervé, just a quick follow-up. Is it naive of me to think that a more restrictive immigration environment in the United States is good news for Australia? It means we get a better pick of global talent?
Why wouldn't you come here anyway? I don't think he's going to stop the 2 million people that come into America on a talent pathway. Mm-hmm. I think his focus will be on the illegal immigrants across the border.
All right. And actually, the bulk of their migration is humanitarian.
Yes.
Right.
Yes.
Like the majority is humanitarian, which is not really competing to the global talent.
And Trump has previously expressed his admiration for Australia's points-based immigration system. Yeah. Hervé, let me turn to you now and just give you a very simple task of putting the Trump election in historical and global context. Where does this election fit in terms of trends in other democracies around the world? And also, what does it tell us about the story of American politics and in particular, its role in the world?
Yeah, sure. Excellent paper, by the way, published a few months, probably 6 months ago, by the Future Fund on these 4 trends, one of which was populism. Look, I'll begin by saying Biden duped us all into thinking that Trump was an aberration, was a sort of fever that had passed, and that he would be a bridge back to normality, when in fact now it's become very clear, given the scale of Trump's victory, that Biden was the footnote sandwiched between 2 Trump presidencies. Trump 1.0 was in fact a prologue to the 4 years that we are about to experience. So strap yourselves in. There is also the fact that Trump is a one-of-a-kind individual. He presides over a one-of-a-kind movement, MAGA, in the US. But if you want to take a slightly more of a bird's eye view in terms of global trends, look, we've seen elections, 75 elections, 4.2 billion people in the world have elected leaders this year in 2024, so it's been the year of elections. Can we draw any conclusions from that? I don't think there's been a decisive swing to the left or a decisive swing to the right, but what we have seen is the Tories lose power in the UK. Rishi Sunak is out. Emmanuel Macron got a huge battering in France. The Liberal Democrats in Japan are struggling as well after they called a snap election. Even Narendra Modi, a like-minded of Trump, has lost some of his majority in India. So what there has been is a swing against incumbency, against incumbent governments across the world. You could argue that the economic and geopolitical conditions that pervade today have created perhaps the most hostile environment against incumbent governments, parties, individuals. And it doesn't matter what your party is, it doesn't matter what your policy platforms are, or the individuals involved. Everyone has taken a back seat because voters don't distinguish between variables that are in the control of politicians versus very complex international phenomena like supply side risks that create inflation, wars across the world, immigration, that sort of thing. So that is the one, I guess, macro trend that we can draw from all of this. That then leads to the question, was this an inevitable result in the US versus a more contingent result? I think it wasn't quite as inevitable as it now seems. Much of that, again, the blame goes to Biden. I think if Biden had chosen to run an open convention and you had a candidate that wasn't associated with this current White House, they may well have stood a better chance rather than the position they're left in, which if they've lost control across the board and they've lost all seven swing states. So that's the first point. I think the second point is I very much agree. Trump 2.0 is going to be less restrained. Trump. It's very clear he sees himself as having a huge mandate that he didn't have in 2016. He has the popular vote now too. He's got both chambers of Congress. And the first months are going to be particularly pronounced. There's going to be two things happening. One is they're serious about tariffs. They're serious about tariffs against allies and adversaries alike. Of course, 60% on China, but 20% for the rest of us. And they're serious about deportation, which is 25 million people up to, which is an enormous thing, which also suggests that, and they're serious about purging the state bureaucracy. In other words, the US is going to be even more inward-looking, I think, in the first 6 to 12 months of the Trump 2.0 presidency than we were used to under Trump 1.0. That means an even more sort of retrenched US global role. Their focus initially will be on their domestic agenda, not their foreign policy agenda. So we're into this big, or this rather, we're into the resumption of this big experiment, which is how can you have a stable global order without traditional US leadership? I mean, that was the question posed to us under Trump 1.0, and I think it's going to be on steroids during Trump 2.0.
Yeah. So Trump we're assuming now that the claims he's made during the campaign, the promises that he's made about tariffs are not ambit claims, that he's serious about imposing tariffs. Let's assume that. I want to draw your attention, Ben and Joe, to a speech that the Treasurer Jim Chalmers gave just last night, in which he said, Australia is well placed and well prepared, but not immune from any escalation in trade tensions. Do you agree?
I think Joe definitely disagrees.
I don't disagree that the tariffs, that Trump's serious about the tariffs. I think it's just the second that there's underappreciation of the impact of the growth hit on global supply of goods.
So Australia's not
right?
well prepared?
Well, Australia, so in some respects we are reasonably well prepared, right? 80% of our exports are covered by free trade agreements with our partners. Actually, we don't export that much to the US, to be honest. In fact, exports to the US are about 5% of our total goods exports. Remember, you only put tariffs on goods, not services. And what do we export to the US? Actually, mostly meat, alongside some minerals and a few other bit of pharmaceuticals. So the things that we export are not the products that are really in Trump's line of sight, right? His is really around high-tech, national security issues. So in that sense, and also we're friends with the US, right? And there's a bit of two-way mutual benefit to that friendship. So I think, are we prepared? I don't think anyone's prepared for Trump, but we're reasonably well placed. I think the biggest issue for Australia, and this has always been our issue, is how do we navigate our growth pulse from China and our defence alliance with the US. And one of the risks is that Trump requires his allies to enact some sort of tariffs against China as well. And then that starts to become much more impactful for us. And the growth outlook for China is critical to Australia. China takes 50% of our goods exports.
So what the threat there would be, what's the or else? Trump, for instance, says you will enact these tariffs or...
So one idea is Trump says, you want to be allies with us, you can't buy EVs from China.
Yeah.
You can't buy anything, can't buy any tech that has a China linkage, because we don't want that finding its way through our defence relationship into our supply chain. So I don't think you see Trump asking us to put tariffs on fridges and washing machines and the like, but around that high tech, anything with a chip inside it, you can see a world where he's more empowered and very focused on that national security. That, you know, another example would be, we've got some of our critical minerals that have been defined as made in Australia that give us access to the Inflation Reduction Act. Trump could well say, you want to continue with that, there are things that you can't buy from China. And then that puts us in a very difficult position, right? Because you don't want retaliatory tariffs coming from China. And we've just exited a whole lot of those. Coal, wine, flowers, lobsters, baby milk. You know, those things are really important to our economy.
It'd be interesting because Trump was never that sophisticated under 1.0. In fact, this was actually a Biden innovation to try to bring the allies in on some of the targeted measures against China, particularly vis-a-vis Japan, the Netherlands, South Korea on microchips. Because of the nature of our exports to China, we never had to worry as much on that. And the question is, yes, I mean, does an America first approach to tariffs lead to sort of an innovation whereby more pressure is placed on allies? And I don't think they've really thought that through yet, is my view.
It's a risk. I would agree. Yeah.
And interestingly, the Chinese are also banking on the other possibility, which is that the return of Trump undermines solidarity among US allies, and that this might be a good opportunity to come knocking at the door of the Japanese and the Dutch and others to see if some of that resolve is fraying in the wake of Biden's loss. So it can play in either direction.
Ben, let me just repeat the Treasurer's quote and get your reaction. Australia is well placed and well prepared, but not immune from any escalation in trade tensions. Agree, disagree?
So, as Joe outlined, look, the first derivative, sure. Look, the last time China tried, you know, I guess, economic coercion against Australia, I'm not sure it worked. They still needed our iron ore and were able to diversify our economy reasonably rapidly, I think to the, you know, surprise of many, probably even inside of Canberra. And so from that perspective, yes, but I think what Joe's describing is, look, we're a small open economy that needs to attract capital. Our capital needs, like everywhere else in the world, are rocketing higher. And if we don't get the disinflationary impulse and we get a hit to our currency, and we're sort of shut out of a whole suite of the normal rebalancing mechanisms, then it's a harder task. It's a harder job.
Wait, we need to attract capital. Don't we have the fourth largest savings of any country in the world?
Oh, that feels like a dangerous. Yes, we do, but we don't have the fourth largest capital markets in the world, and increasingly, much of the marginal saved dollar goes offshore because it kind of has to, and so, you know, so unless you know, so it's not sort of it's not a one for one, but it's an interesting ponderance. Yeah.
I forgot to mention at the outset that I will be opening this up very soon for your questions, so please get them ready. I'll just ask a couple more myself. I wanted to talk, firstly, Hervé, just to ask you about the risk of conflict. You mentioned earlier the Future Fund's report, which was released, I think, in July on geopolitical risk, and the risk of interstate conflict, I think, looms very large in that report. Do you want to offer some thoughts here about trends? As I said in my introduction, it wasn't that long ago that we thought we'd left that world behind. Okay, civil wars, still very deadly, but we don't see much interstate war anymore, but that's clearly turned around for the worse in recent years.
Yeah, well, one product of a more anarchic world is that you can expect more war, and we've seen a steady resumption of war, interstate conflict since 2012. So this is a pre-Trump phenomenon, but I suppose might be accelerated under Trump. Look, I guess my central thesis is that if you don't really have a singular global power anymore, or at least you have a global power who doesn't really want to be a global power anymore, then you really don't have a singular global order anymore. You really have to start analyzing the world in terms of the major regional geopolitical theaters, and each one of them is quite distinct. There is a lot of spillover between them. So, for example, you see the North Koreans now sending troops to the front in Ukraine, and the South Koreans supporting Europe. So both sides of the Korean Peninsula now involved in the European conflict. That's one example of spillover. But my overriding thesis is that basically the Middle East, Europe, and Asia are still run in quite distinct ways, and they have quite distinct power dynamics. So let's break those down very quickly for you. The first test of Trump will be in Europe. And in some ways, a bit like the pandemic, Australia is lucky in that we will have a sort of wait-and-see approach. Let's see what he does in Europe, and that might well signal some things that we might need to learn for ourselves here in Asia. Why do I say that? Because we have an ongoing and active conflict in which the US is intimately involved, and that's Ukraine. And I guess there's two theses here. I mean, there's the Trump's own thoughts on the matter, which is that basically Zelensky has been an expert salesman, but has got far too much American largesse as a result, and we need to taper that off and resolve that conflict within a day. Of course, he's never going to be able to resolve the conflict within a day. So what does he do from there? There's an argument that basically doesn't want to look weak, and that as part of not looking weak, you actually have to negotiate from a position of strength, and that actually entails supporting the Ukrainians. Regardless, I think, it's amazing to me, and I say this partly as a European, how after the pandemic, after Trump 1.0, and with the specter of the Trump 2.0 return, the Europeans still haven't got their act together, because they are the one part of the world where that you could actually function and survive in a post-American scenario. They have the numbers, they have the GDP, they have the population, they have the collective defense spending to easily see off the Russian threat. Now, Ukraine is in question, but the idea that Russia could pose a hegemonic threat on the European continent is ludicrous when you just look at the numbers. But of course, the political reality in Europe is that it's very fractious. So, as Macron said a couple of days ago, we need to learn to become omnivores, otherwise we'll be eaten by carnivores. We can't let Europe simply be a herbivore anymore. And so you've seen the EU pivot already. They're talking about using some of their cohesion funds towards defense spending, and they really have no excuse. So let's see if the Europeans can get their act together. And if they don't, well, it actually portends some very bad news for the collective ability of the broader West to survive in the Trump era. Then you have the Middle East. The Middle East is a truest expression of a multipolar world order, and it's not a good one, right? It's messy multipolarity. It's the post-American nightmare scenario where no regional power has the upper hand. Everyone is vying for the upper hand. You've got the Saudis, you've got the Israelis, you've got the Iranians, you've got the Turks, you've got the Chinese, you've got the Russians, and you've got a lot of war and the potential for escalation. Now, Trump's impulse here, as Lydia Khalil, one of our experts, says, is to look strong but do very little. So I don't expect he will do very much at all in the Middle East. So you'll see a continuation of that sort of post-American scenario. The Iranians are probably worried of Trump. So that means that perhaps the risk of conflict metastasizing into something bigger is reduced. And finally, we come to Asia, and in some ways, the US East Asian allies are also the most protected initially. They won't bear the initial brunt from Trump, who will be focused primarily at home and then on Europe. Nevertheless, we are the most structurally dependent on the US. US allies in Asia Pacific or in the Indo-Pacific are in the minority. In a post-American scenario, China is unquestionably the dominant power, not necessarily in the sense of building a stable Sinocentric region, but certainly in the sense that it could portend greater instability, more conflict. So I think the risk of conflict in Asia grows under Trump, but the risk of a US-China confrontation declines. That seems somewhat counterintuitive, but basically I think Trump is less likely to get involved over a Taiwan contingency or to try to save the Sierra Madre, the Philippines stranded Navy ship on the second Thomas Shoal. But China may feel more empowered to actually want to at least test the resolve of allies in the absence of the US.
Thank you, Hervé. I'm glad you finished on Asia. That's where I wanted to move to next. So, Joe and Ben, I want to ask you a question about a potential upside to the spectre of tariffs, and I want to thank my colleague Roland Raja for suggesting the question. Is it possible that the threat of tariffs will do for China what Western economists have been telling them to do for years now, which is that it will force China to stimulate the economy through consumption and switching to a more consumption-driven growth model rather than relying on exports? And in turn, isn't that good news for Australia? Am I clutching at straws there?
Yes. I mean, that's sort of, that would be a wonderful sort of Western economic rationalist outcome. All of our interaction, research, discussion, reading, and sort of empirical, whatever, evidence-based searching would suggest that's not the most likely outcome, that's not the intention, it's not the desire, certainly of this Chinese leadership. So it's not something we're relying on.
Okay, so but let me dig in a little deeper, because there have been some more tentative steps recently of the central leadership in China pushing towards consumption-led stimulus, right? But you don't see that growing?
No, I would say they're very tentative. Market got very excited about them, then very disappointed, and they went back and tried to, re-underwrite that, and then market got disappointed again, and then I think they went a third time. That mostly seems to be, establishing a floor for the Chinese domestic economy whilst continuing to pursue the exact economic model that they have been pursuing, certainly since 2015. So our view is that that's not, I don't know. Look, maybe it gets bad enough that something, they change their mind, but that it doesn't seem obvious to us yet.
Joe?
I think that's right. I mean, I think, Western markets have been calling and wanting China to stimulate for the last 12 or 18 months, and we've only seen some stimulus recently. If you look at the package that was announced last Friday, whilst the overall package number was quite large, it was all local government debt resolution. There was nothing for Chinese consumers in that at all, not a single yuan. There was also nothing in there directly for property stabilisation. So I think we hear that argument, but that's actually, to your point, that's not what's playing out. And when you look at, if you kind of step back and think about how this stimulus plays through the economy, we would describe it as de-risking rather than stimulating. So they're de-risking to ensure that growth doesn't get too weak, but they're not doing anything really to supercharge growth. And the other point I would make is actually really hard to stimulate the Chinese consumer because they have a confidence problem. So the way I describe it, most of the policy stimulus to date has been cutting interest rates, right? If you have a confidence problem and households don't feel confident, cutting interest rates is like pushing on the bottom of a piece of string, right? You don't get anything for it. And the other thing in China is that monetary policy works through the wealth effect, not the income channel. That is, they have about $1 of savings for every $1 of debt. So when they cut interest rates net, the household sector doesn't actually get more income, but they need to boost asset prices, and they can't boost house prices because they've got a glut of housing. And if you think about how that plays through to Australia, we sell iron ore to make steel. You need steel to make new housing. Well, for every one property that's under development at the moment, there are 11 that are completed and not yet sold. Yeah. So even if there is stimulus into the housing sector, it will be designed to try to sell this stock that's already been built. So even after the stimulus, we haven't revised up our China GDP numbers, and now we'll revise them down because of the impact of tariffs.
I think it's reasonable to take it as a flare for what the state of local government finances are and have been.
De-risking, by the way, is exactly the term Jim Chalmers used in his speech last night as a description of Australia's policy. He contrasted de-risking with decoupling. I've a final question from me before I open it up to all of you, and it's again to Joe and Ben. Can you say something about how the geopolitical analysis that you do and that we've been talking about today, how it influences the decision that you make at the Future Fund and at Barrenjoey? It's one thing to say that country A is about to get an election shock, or that countries B and C are likely to go to war in the coming 12 months. But how do companies actually weigh these forecasts and then inject them into their investment decisions?
Sure. So, I mean, I spend most of my week talking to boards and major investors. And everyone's interested in geopolitics. Right? We can put on a call with a geopolitical strategist and we'll get every key investor dialing into that. The comment I often hear afterwards is, that was so interesting, I don't know what to do with it. And as an economist, I feel like everyone looks at The Economist and I sort of go, well, Holly, you tell me what's going to happen and I'll tell you what the economic impact is, right? I'm not a geostrategic expert. My observation would be, from an economic perspective, it's incredibly hard to put these things into your modelling framework. Our frameworks are not designed for economic sort of confrontation, geo-economic confrontation, just like they're not really designed for any other of the supply shocks that we're facing. Increased incidence of climate events, energy transition, cyber attacks. Like, our modelling actually doesn't operate in that sort of framework. So I think there's going to be a lot of work done in trying to do that. The reality is, though, for me, when I think about geopolitics, often the conversations are the tail risk, right? I care about the aggregate, you care about the tail. So maybe I don't need to put it into my forecasts, but what I need to do is be aware of it, understand what the warning signs are, the leading indicators, and I think you want to do the work beforehand. So you don't need to bake it into your investment strategy or your corporate strategy, but you need to play out the scenario and understand what would be my response when I start to see the probability of that event getting up to something that does need an investment strategy or a corporate strategy response. So the good news is, post-pandemic, generally, investors and corporates have become really good at scenario planning, right? It's one of the skills we learned in the pandemic. So we're better equipped for this world that I think we're going to live in for, you know, the next 1, 2, 3, 4 decades, well beyond my career.
Ben? Yeah, it's 23 minutes, it tells me. I could filibuster the rest of it telling you how we bring this into our investment strategy, and I won't. But it's completely central. So it's the foundational part of how we think about our portfolio. You know, various of us describe our portfolio as an asset owner, as like a super tanker. So we don't have the luxury of being like a hedge fund where we can sort of, events about to happen, let's turn our portfolio upside down, let's go to cash or whatever. You know, we have exposure to the world and all the interactions that happen within it every minute of every day. And so we have to think about that very, very deeply, and yes, forward plan, and yes, scenario plan, but also develop a probabilistic assessment of, okay, how do we think the world's going to go? What are the policy interactions that's going to influence it? How's that going to flow through to capital markets? How's that going to flow through to various asset prices? How do I think about the risk and cost of capital in that? And is it worth being in those parts of the world, or those industries, or those companies, or those verticals and horizontals that are going to be impacted by it? Is this a good place to provide capital? Is this a bad place to provide capital? What price would I need to take on that risk? So that's a very complicated and always task, but it's something we challenge ourselves to essentially continue to reiterate all the time.
Yeah. Well, please raise your hand if you have a question. There's a microphone at the back of the room, which we can move. Why don't we start at the front here? We'll just wait for the microphone.
Thank you very much. Yes, thank you very much. That was a fascinating discussion. My name's Leslie Seebeck, generally at large now with GeoMastery Advisory. Quick question, and given it's fairly broad, we've got a budget coming up in March. Given the geopolitical circumstances, and thinking about the implications for your own investment portfolio and for future fund helping sustain, Australia's, public service investment, etc. What are the sort of things you would like to see in that budget? Is it paying down debt? Is it putting more into defence spending? Is it building up industry capability? What is it that you would like to see that would actually help build Australia's resilience and economic resilience over the next decade or so?
So I try very hard not to talk about domestic politics, and so I won't. Look, but what I can talk about is like what have we seen everywhere else? Like fiscal largesse opened up through COVID and has continued on its merry way. I see no sign of that stopping in the US, and these are all obvious sort of stats, but we have extraordinarily low unemployment, very reasonable high nominal growth, very reasonable high real growth, and an extraordinarily large deficit in an economy that looks like that already. And you have the potential tailwinds here of, if you believe, all of the, let's say you don't believe Joe's view and you believe like the Trump, rhetoric view, and you think, okay, you're going to reduce deficits via various measures, you're going to get an enormous productivity increase by deregulating and making permitting and whatnot much easier. You're going to declutter the system, and maybe you get a technological revolution which also boosts productivity. Then that's a really extraordinary right tail outcome which sort of ends up paying for itself. Now, that may be more wishing than planning, but that's what we're seeing sort of everywhere else. It's a very interesting world for capital markets, a very interesting world for equities. We have been, we've held way lower interest rates than we normally would, and we've held much more risk than we normally would because we've been sort of looking at this world and more or less thinking that seems to be the way it's going. Does that have a Liz Truss type endpoint? Harder in the US than elsewhere? Probably less hard in Australia. If we really, I don't think we can compete in the same way with fiscal largesse, so we have to find smarter ways to attract capital.
Leslie's question does raise another in my mind. What would need to happen in Australia what would need to happen in the world for corporate Australia to actually lobby the government for higher defence spending? I wonder. Maybe it already happens behind the scenes, I don't know. Who's got another question? Why don't we go to the back there? Rach, anyone you like.
Thanks very much. John Connor. It's much discussion about traded goods in terms of policies and what have you. Almost no discussion about capital movement. And if one looks and sees what is going to be certainly a ever-ballooning US deficit, which has to be funded, you've got two, in our general neck of the woods, we've got two major funders, China and Japan. None of their interests seem to enter into the discussion. Yet the fact is that the US will be unable to pay for that debt, to issue the loans that the treasuries require and what have you, without substantial support, or at least without selling down by those two countries. Could I have some comment?
Yeah, look, it's a great question, and one that comes up with investors all the time. We've got US budget deficits running at about 6%. The interest expense is about to become their largest expense item. We call that fiscal dominance, so you end up in this terrible circular sort of deteriorating fiscal position. Government debt's about 124% of GDP. Looks like it'll go to close to 140% under Trump. So this is this fiscal largesse, and economics tells you, and this is really what you're saying, right? Economics tells you that it's unsustainable. I think everyone agrees that the rules are a bit different for the US. The US is operating as if the rules don't matter at all, but at some point they matter. The reality is we don't know when that tipping point is. And as you said, we've got this increased debt, and at the same time we've got central banks, particularly out of Asia, who've been big buyers of US treasuries and no longer buying as much because they're trying to reduce their reliance on the US. My own view is actually there'll always be a buyer of US treasuries. It's the question is at what price? So I find it hard to see a world where the US can't fund its deficit, but I see a world where they fund it at materially higher interest rates. And this comes back to the sort of framework that you had, right? Like, we'll look at the assets, how much am I willing to pay for it? How much more return do I need? We talk about hurdle rates in our world, which is, you know, the return that you need on an investment. It's a risk-free rate plus a risk premium. That risk premium is going up on US Treasuries for the first time. So US Treasury yields are about 4.5% now. It's possible that they get to 6, 7, because you'll need to encourage investors in when your natural buyer base has reduced and you're issuing so much. So for me, I worry about it not so much in failed auctions, but at what it does to the US interest rate structure, and that those longer-term US yields they anchor yields around the world, which is exactly what we've seen in the last little while. So everyone around the world ends up not necessarily with a higher cash rate, but they end up with a higher long-term interest rate, and that makes investment more difficult globally.
Yes. Rach, all the way at the back.
Hi. Hi, Alan Lowe, Macquarie. So I think in the last couple of hours, we've seen a few announcements on National Security Advisors, Secretary of State, so it's going to be Rubio and Waltz. I guess it feeds back to a broader question. You talked about Trump's governing style. You know, he's got fewer constraints. What's your view on the role of key people in the cabinet and their advisors, and how do you feel in the second administration, the level of influence that they'll be able to provide versus, let's say, Trump, you know, making his own call?
By the way, I hadn't caught up with this news, but you're saying Marco Rubio has been nominated as Secretary of State? Okay.
Wow, so not Colby, which is interesting. In lifetime process. Look, I think the fascination with this question and with the people around Trump is that personnel is policy, right? And particularly under Trump, because he's actually surprisingly malleable. He's got instincts, but he's not a policy wonk. And if we learned one thing out of Trump 1.0 is that the people surrounding him did matter. Of course, he can dispense with them very quickly, and that builds instability and unpredictability as well. But the people around him matter. I'm not going to comment on individuals so much, but I think it also raises a question around the contradictions of Trump, because there's unquestionably enormous contradictions, and I think one of the biggest question marks out there is this settling point on China. If you consider Elon Musk's influence on Trump, I mean, that has interesting implications both on China as well as climate policy and the IRA. On China, because essentially Musk is in deep in China. He's got his Tesla factory in Shanghai. That rubs against the sort of orthodoxy that we're going to see 60% tariffs. So what is the Musk effect on Trump there? Keep in mind, I think Musk was something like the second highest or second biggest donor of towards the Trump campaign. Arguably, and I've heard, this is not my line, it's not original, but I've heard it said as well that he was the biggest supporter if you consider his $44 billion takeover of Twitter as having been support in kind towards the Trump campaign, completely remolding that platform into a pro-Trump platform. So Trump owes him something. And I think the other thing is that on climate policy, I mean, again, Tesla functions on the basis that we're all moving into this post-fossil fuel world, and that in part government will at least not hinder that movement. So what is the future of the IRA? Is another interesting question mark. So the Musk effect on Trump creates things to follow. In terms of individuals, specific individuals, I mean, I think you had a really good comment there about it's looking like he's chosen loyalists. He's got more people to choose from. He's got an entire machinery that's much more organized this second time around than it was the first time around. And I think all the nominations so far support the view that he will act fast. And that he will be licensed to really operationalize on his mandate. Now, of course, beyond that, I think it's not. I mean, and we were speaking to high-level Indian officials this week. We're very happy at the clean result, and they were sort of saying you're way too bleak and pessimistic about this, because in the end you have a much more politically stable America as a result of a clean sweep, but it remains a 50-50 nation. And to borrow Susan Glasser's terminology at the New Yorker, the sort of domestic instability, eventually Trump will overreach. Eventually he will. We almost know that. We can guarantee that. And to borrow her analogy, it's like a circular firing squad. And so if in the first year Trump makes some really pronounced, very radical moves, particularly on the domestic front, you can expect the next 3 years to be very unstable domestically as well. So the risk of domestic political instability in the US is something we need to factor in as well, even despite the clean victory.
I would just add, actually, that in terms of the Trump agenda, you would have to assume at this point that the presumptive nominee for the Republican nomination in 4 years' time is J.D. Vance. So that on the Republican side, at least, that agenda's pretty well
If
locked.
he doesn't fall into the Trump wood chipper as his predecessor and so many others have as well.
You've been very patient, sir. Please wait for the microphone.
I don't normally need to, but I will.
Thank you. For our online audience.
To wrap up a couple of those last points, Chapter 2 of the Strongman Handbook for the last 100 years has been constitutional change so I can stay in power. Article 5 of the US Constitution says 2/3 of the state legislatures are required to push for an amendment. Trump is 6 short at the moment of being able to remove term limits. Any scenario thinking or planning or rocking backwards and forwards and weeping on that?
Look, I think it's hard enough to predict what he might do in the next 3 months or in the next 2 months once he gains office. I can't predict what he will do in the second half of his second term. He may well be tempted. Has he still got levels of support then that he does now? I suspect there will still be some sort of tipping point against Trump towards the end of this term that will frustrate his abilities to want to stay in power, if that's what he wants.
I would also add that father time and a high-fat diet may also intervene on that question.
He also won't have a clean sweep for his whole term. Unlikely he has a clean sweep for his whole term because he'll have the midterm. So he's got a pretty busy first up agenda.
Yeah.
It's a nice, interesting point there.
By the way, I'm constantly scanning the room for female hands up as well, so please don't be shy. Men tend to dominate these conversations. Yes, sir, please.
I spend a lot of my time looking at potential catastrophes, of which the biggest is basically global thermonuclear war. I just invite you to speculate on something which is sort of one step below that. What happens to the global supply chain for high-end chips when China undertakes military action against Taiwan, given that 90% or so of them come from the Taiwan Semiconductor Manufacturing Corporation?
Well, I mean, clearly the world has somewhat woken up to that as a potentiality and very assertively de-risking that situation by onshoring a lot of that fab production. Now, that's a very complicated engineering process. It's a very expensive engineering process, but, Columbus, Ohio is now generating those chips. Parts of Arizona are now being able to produce those chips. And there's announcements on an almost weekly basis globally around a new fab opening up somewhere. So I think this is part of this kind of resilience versus efficiency dynamic. This is sort of exhibit 101 of that exact dynamic in place. It's a bit more expensive. It's quite a bit more expensive. It would be much more efficient if, we could just continue to farm them off that island. But this is a de-risking, situation.
Yeah, I also wonder whether China's interests are served by completely cutting off that trade. In the unlikely event it could actually recapture Taiwan without doing significant damage to those to that fab, whose interests are served by then cutting off global trade with them. Yes, please. Time for one more here. This gentleman.
Thanks. Michael Feller, Geopolitical Strategy. And I've got a follow-up to that question on Taiwan. Do you have a sense of probabilities of peaceful or non-peaceful reunification of Taiwan and China during the Trump term?
Should have had you on stage. I'm just an economist. Humble economist.
Look, I think part of this speaks to the settling point between Trump and China, and it's unclear where that goes. The Chinese, unlike the Russians, will be very nervous with the results. So I don't see, they're not sort of jumping for joy thinking they've finally got their window of opportunity on Taiwan. So Trump's mere kind of unpredictability is enough to kind of discombobulate and complicate China's calculus here. On the other hand, you can also speak of a scenario where the US might ease up on some of the pressure, Taiwan-related pressure on China, in exchange for a very favorable bilateral trade deal between US and China. Anything's possible. I'll just say that I think China, to Sam's point, is still more risk averse. Much more conservative than Russia, which is not necessarily to say more benign in their intentions, but much more conservative in terms of how they pursue their self-interest. And at the moment, their political strategy has failed in Taiwan, as in the Taiwanese are not feeling more inclined to want to reconcile with mainland China. But their military strategy is one of many cuts and progressive strangulation and illustration of strength, without going for an all-out assault. And I think that's probably, we'll see more of that. We'll see more of China trying to test the waters, looking at how Washington reacts in the process, but probably not inclined to make an immediate move on Taiwan.
Well, we've just got time as we wind up here for me to go down the line and ask you all three the same question, which is about what we've missed today. In terms of geopolitical risk, what haven't we talked about yet? What should we be worried about? Or if you like, what's your black swan for the coming, for next year, Ben? This will sound like a strange answer. And the one I think about most is, given where our positioning has been and where our portfolio is that these policies work, and actually we get a dramatic right tail outcome. So, like for markets anyway, it's the thing that I care about. But if we get a massive hit to productivity with a lot of nominal growth and a huge technological revolution, which allows us to get all of that whilst also disinflating, that's an incredibly strong outcome for capital markets, and you'll get and the US will capture most of that, and this ongoing US exceptionalism will be, the momentum behind it will only continue and accelerate. So that's a right tail risk. The other side of that is you get that productivity boost in a quite accelerated way through cuts in operation expenses, and most of those are humans, and that problem gets thrust onto the fiscal balance sheet, and you get the social ramifications of all of that. So they're sort of two sides of the potential same coin. Jo?
So I was also going to go right tail. I was expecting everyone else to hit the other side of the curve. I think that, we're facing a really uncertain and unfamiliar landscape, particularly with the Trump presidency. So I think it's very easy to get caught up in all the things that can go wrong. So I guess my black swan is, what if Trump comes in and he's just a little bit more brinkmanship? You actually don't get that many tariffs. He can't deport that many people. You get a productivity uplift. He manages to resolve Russia-Ukraine. He manages to get some sort of managed peace in the Middle East. And we're all sitting here in 12 months' time going, oh, gee, it wasn't so bad. They're the bits that we're not talking about. Now, it's a low probability, high impact event, so it definitely meets the black swan, but I think we need to be careful to think about the whole range of potential scenarios. And maybe we know more after Trump's first 100 days.
Excellent. Hervé?
Yeah, I mean, so you're saying, what if he actually follows through on his promise of great national rejuvenation and it works out?
We were talking low probability, high impact, right?
That's right. No, but I actually think, and this is a nice way to end, is to say that, you know, things are rarely as good as we hope or as bad as we fear. And I think that's sort of how we have to, we've got to be aware, our eyes wide open as to the risks. But you know, there is still a possibility that we navigate through this fairly intact. And then just to end on a downbeat, I guess, because everyone's so upbeat, is just consider as well, I mean, especially in our world, we sort of think of foreign policy as very distinct from domestic politics. But you might well have this collision of worlds. So, for example, we've heard from Trump affiliates to say that if Europe decides to mess with Twitter and regulating Twitter, that's the end of NATO. You know, so just the fact that they're linking these two things is kind of interesting. I mean, we've seen Albanese unveil the government unveil new restrictions against social media platforms. Well, what will be the effect of that on AUKUS? So these are the sorts of issues and issue linkages which we previously haven't really had to think about, which now will come to the fore and mean we have to, you know, navigate.
Yeah. Thank you very much, Hervé. Ladies and gentlemen, would you please thank our panel? And thank you, as always, thank you for being here and for supporting the Lowy Institute's work. We look forward to seeing you at a future event. Thanks again.